Sky News Real Estate. Smart investing.
Hello and welcome to Smart Investing. I'm Chris Gray. On tonight's show, Australia's most expensive apartment has recently been sold for $60 million. So what do you get for all that cash, and could you be one of their neighbours for a lot less money? You'll always pay more for clothes and accessories that have a big brand label, but does the same go for a property that's been branded too? And if money was no object, what would you include in a luxury apartment? Well, joining us on the show tonight is Erin Van Chul, Director Sales and Marketing at One Barangaroo, and Charles Tarbey, Chairman and owner of Century 21 Australasia. Now, I'm sure I stuffed up your surname. I'm sorry for that.
Quite all right.
But One Barangaroo, a lot of people don't know about it. Tell us all about it.
So One Barangaroo is really exciting for Australia. It is Australia's first six-star branded, hospitality branded residences. The key differentiator really between Barangaroo and other prime apartments within Australia, we only have 82 sitting on top of around 340 six-star hotel rooms. We have an incredible amenity. There's a private residence entrance, private pool deck, private concierge, all for the residences. All of these layers, also with obviously an incredible location, add up to make it Australia's most luxurious residential development.
Now, hopefully we'll be able to play some videos, some pictures very soon. James Packer was reported to have spent $60 million on a duplex, and I'm sure with confidentiality there's a limit to what you can say, but yeah, it sounds like it must be a fantastic apartment. Yeah,
there is a limit to what I can say, but I can say that each residence within One Barangaroo is different. They all vary as a result of the architectural design of the building. Mr. Packer's purchase was very unique, but it does involve an amount of customisation to suit his needs beyond the initial purchase price.
And obviously we've got the video there. It looks absolutely fantastic. Charles, it must be impossible to try and value a property at an exact dollar amount when it comes to that level. What's the difference between something is worth 60 or 50 or 70? Yeah, is it worth potentially anything at that value?
I think valuers and valuation levels stop at around about $2.5 million. They start, they sort of get a little bit impractical above that price in many cases, because if you look at, I was looking at property on the weekend with my daughter, and she was looking in this area and it was up to $3 million, and I looked at the house and thought you could construct the property for $800,000, so does that mean the land was worth 2.2? And so I guess it just gets to a point where supply and demand kicks in, and then there's a level where it's what people want. It really has very little to do. If you look at some of the prices properties have achieved, it's very hard for a valuer to sit there and value a property like that.
And you would have thought that most of these super wealthy, they're not necessarily getting a 90% mortgage with LMI, so...
No, generally it's 100% mortgage. It's against their business or something else they've got, from my experience. But no, it's not really about valuation. It's about what people want when you get to a certain level, and there's very few people that can afford those prices, so they'll pay it if that's what they want.
Yeah. Now, Erin, this is the first branded apartment, so people might have heard of like Trump Towers or something like that. I assume that's a branded thing. Is this the way to go these days? And
yeah, so branded residences around the world have been around for quite some time, but this is a new thing for Australia. Other developers do sort of use slogans around being paired with hotels or offering a hotel-like service, but there hasn't been anything in Australia that will offer the service that Crown, with their 20 years worth of experience in Australia, is able to offer. The development will be fully serviced, so if you want to order a burger at 3 o'clock in the morning, if you want housekeeping, fresh flowers, valet parking, a full suite of concierge services, whatever that is available to you as if you were staying in any other of Crown's five-star hotels.
I think that's the big difference too. I mean, there are properties in the city of Sydney, there are apartment complexes that are next door to other apartment complexes, and because of the way they've been operated by the people within them, the concierge services, they're worth more because people want to live there. They're not necessarily any different in terms of their structure and the size, but it's because of lifestyle. And there's one particular apartment complex in Sydney that I know the values are there only because of the way in which, when you walk into the building, the services in the building, the way the staff treat you, the whole experience is so much better than across the road. And people are paying more just to get in there.
And so, Charles, when it comes to selling luxury property versus a $500,000 one, is the campaigns completely different?
Well, it is, because, you know, as I was saying before, when you get to a certain level, there's a lot more people. There's hundreds of thousands of people at a $500,000 property. There's probably a handful of people that would be in a position to purchase property like that. So it really comes down to what people want. And I think it's not so much how you market it, it's your connections, your database, the way you're structured in business. There are plenty of people that come across your desk over the years in business that you just pick up the phone, you say, oh, I've got a property and this is one. And that's really how most of those top-end sales are made. From what I've seen around the traps as well.
So, Erin, what's actually driving the demand for these branded properties?
Well, I think it is being driven by a lack of prime stock within Sydney. We just haven't had the available apartments that really meet the expectations of the ultra high net worth individual. And Australia is attracting more and more ultra high net worths. I think we've anticipate that through the Knight Frank Wealth Report that we'll see an extra 37% ultra high net worths in Australia over the next 5 years. Combining that with 88% of high net worth Australians thought that their wealth increased last year, we need housing stock for these people, and it just hasn't existed. So I think that has absolutely driven demand.
So give them the casino to spend their money at the same time, eh, Charles?
I think that in Sydney, a lot of the marketplaces, there's been a lot of construction, the developers turning over stock. They just want to get in and turn over their stock. And not many of them will take the chance on doing something of high-level quality. And this is why these sorts of complexes will always hold their value, particularly if you've got all the services around them. Barangaroo is amazing. My office is just a few hundred metres from there now, and my elevator goes straight into Wynyard Station. I walk a few hundred metres, I'm in Barangaroo. It's a whole different world. And there are not too many places like that in Australia. And I think that's what's so special about that area.
Absolutely.
So, Erin, who's actually behind the creation? Because I guess you don't get any old architect and any old builder to build something like this.
No, and that's all part of the value add and what makes the building so special. I mean, we've got Wilkinson Eyre, our architects. They're out of London. They've got an incredible global track record. They do amazing things with glass technology. Our interior designers are Maya Davis. They're out of New York. Again, you know, their sort of interior architecture, given all of our apartments are so unique, has been absolutely amazing. And then our landscape architects are Saint Leger, based out of Southeast Asia, and they've done a beautiful job in terms of the pool decks, which are just stunning. So Crown has really brought together a team of experts from around the world, a global development, but here in Australia, and absolutely it will rival the best of what's available in the world today.
Well, hopefully we'll have a special media day that we can check it out, eh, Charles?
There will be a media day, and you're more than welcome.
We might be lucky, Chris. Might be a couple
We'll
left over
get Tom to bring us swimmers along.
There will not be any left over that we can't. We won't be giving them away.
We're really lucky.
Yeah, you'd have to be very lucky.
Well, Charles, let's come back down to earth. Yes. Let's talk about, I guess, the average properties and what's happening with the clearance rates at the moment.
It's still very interesting. You know, the clearance rates this time last year was 74.1%. So you look at how they've been trending nowadays, it's 67.5 for the weekend. Not a massive difference, but 67.5, as I mentioned to so many people, is still a very nice marketplace to be in. There's more stock, although the stock levels are slightly changed, which we'll talk about in a second. But the issue really is that everything's sort of slowed down. Everybody's got this special pace that they're moving at now compared to what it was like. As I mentioned with my daughter looking at properties, where she looked, you might find one property there 6 months ago. She was able to roam around and find a dozen. So it's a very, very different world. Sydney came in at 67.8%, and they had 1,055 auctions, and Melbourne had 1,656, so they're back up there, but their clearance rate was 68.9. But the special one this week, not too special, but was Adelaide, was 69.7. So nobody broke the 70% barrier of auctions from the weekend. Of course, that figure will change as we get through the week.
Wonderful.
Downwards.
And what about homes advertised for sale?
Yeah, they've been trending upwards for quite some time, but they started to slow down. Last week was only a plus 0.48% of stock level rise. This week it's a minus 1.27% in stock. I'm not quite sure what that's about, because there has been maybe it's because there has been a significant amount coming on over the last 5 or 6 weeks, and now people are starting to recognise that, oh, you know, maybe I'm not going to get that big price I was hoping for, and they're coming back. But we still have 3.87% more stock at the moment than we had this time last year, again with fewer interested or fewer pressured buyers. So that's what the change is that's coming through.
And what's happening with rent price?
Now, not a lot, Chris. It's been levelling out mostly across the country. Again, it seems to be levelling out in tune with what's going on with the rest of the marketplace. You've still got some great performing areas like Hobart still moving along, and I think that's part of the halo effect. And I'm wondering when that's going to slow down, possibly when more of the stock that was being built that investors picked up comes on the market, and then all of a sudden there might be some more competition in that arena.
Wonderful. And then just finally the vacancy rates.
Yeah, they're really good. I mean, wow, Victoria, 0.59% vacancy rate. You hardly see anything like that. And beating Sydney of all places, Sydney was 2.06%. Still very solid, but Perth's back. It's been floating back and forward, but nowhere near the high 10s and 11s that it was. 6.97% for Perth side. Again, I'm really happy to see that marketplace change, because it's now pretty much hit the bottom and starting to move upwards. So 3.21% over the three capital cities was
Wonderful.
the average, Chris.
Sounds good. Thanks for those results. Now, Darren, before we jump to the breaks, how's the development progressing, and when's it due to be complete? Because quite often you see them do all nothing happens, and then instantly it's all done.
That's definitely not the case at Barangaroo. If you're down there enjoying any of the restaurants and eateries and bars that are really active down there, as you said, it's a great precinct. If you look north, you'll see three really big cranes. They're ours. We're well out the ground.
Branded cranes as well, I've seen.
There is some branding on some of the cranes, but it's really exciting to see. And every time you look over the site and you see more activity, you see more happening. But we're well and truly out of the ground. We're on the way, and we expect completion in sort of early 2021. So 3 years.
A couple of years away.
Yeah.
Wonderful. Sounds good. Thanks for joining us, Charles. Now, we'll have more on the luxury property market when we return with Tom Panos from News Corp. And just a quick reminder, you can also get a copy of my digital book of my book, The Effortless Empire. Just go to yourempire.com.au. Now, we're going to take a short break, but we'll be back soon.
You're watching Sky News Real Estate. Smart investing.